if the market's not doing a whole lot, you'll know, okay, well, things are okay, but if it keeps floating up, oh, maybe this isn't such a good idea. Maybe I should get out. How many of you have seen on a video where I say, if you get in, say the market's moving up, and you get in, and the next 15-minute bar turns down, just close it. Get back in. I mean, our transaction costs are really fairly low. We're not, I mean, on a percentage basis, I know they're high. We won't get into that. But in general, there's not a huge hit if we're getting in and out a couple of times. Because the odds are, if people are buying, the market keeps going up. You see how now it's starting to fit together? Okay, this is how we can get some certainty. What the Japanese researchers found out was that type of thinking really is right. Now, as a trader, I got that from sitting at the screen and hearing other guys talking about it and saying, yeah, you know, I've done that a million times and it just doesn't work. So if you buy a breakout and it turns back around, just get out. Oh, okay. I said in the beginning. And then I saw it work and saw it work and saw it work. Well, they actually did research. That's what they were saying. If the market is going to break out and it's going to keep going and you're going to have a profitable trade, people will keep buying it. Now, why does that happen? Because that was sweet. All right. I lost the dramatic effect. Because of the other guy. The other guy will keep buying. Is you have to remember the banks of the world, they're just not like us. You know, when they want to go get something, literally the guy in the ivory tower calls down and says, hey, buy 20 million euros, and he hangs up the phone. Now my neck's on the line. You think I'm going to wait? Or wonder, is that a good idea? Well, I don't know if the boss man's really right. What am I doing? Give me 20 million euros. So then, you know, the business gets done. It just gets bought. So what we're taking here in the insider code system is taking a very small opportunity in time where we have a likely move in the market. When you add Hercules on top of that, you'll have a better idea, is this move going to continue? So if you're looking to sell and the strength is really high, it might be a good time. But even better, you're going to see the gray areas. You're going to see those times when there's just nothing going on. And I'm telling you, as I've used Hercules, I have been shocked at how little the market really does when all those, when you, I'll promise, I'll download Hercules and I'll put it on the screen. But when you see those lines just cruising through the middle, watch a movie. You know, save your money on a short-term basis. Now, what Cecil's going to talk about is a way to expand it out and use different time frames to where you may indeed have a trade. So, what are we talking about here? Very short term. Very short-term stuff. My goal with Hercules was to give you a tool where you could, I'm going to demonstrate your trading day. Is everybody ready? Okay. Did you catch that? I'll do it again. Oh. Right? We want to be that fast. I mean, who here wants to be a trader? Okay. Who here knows what that means? What does it mean?
A trader is sitting at the computer and watching the movement of the market all day long.
Okay, sitting at the computer watching the market all day long. Who wants to do that? A few less hands. What's a trader? Ma'am? Buying and selling.
Making money.
Making money. Can I put on a bit of a therapist hat for a second? Seriously, can I? Will you let me do that? I promise I won't go very long. I promise. the first description, the first answer was action, right? What you're doing. And I'm not picking on you because it's an important point. Is making money really an action? What happens when you don't get your result? I prefer throwing fits, right? Kicking and screaming. My 2-year-old will throw a fit. My 6-year-old will throw a fit, so I figure, hey, they're doing it. We don't like it, right? We don't like it when we don't get our results. So what I would challenge you on is to start thinking more like the first answer. What is trading? Now, when I asked how many wanted to be traders, most of the room put their hands up. But then when we talked about what the action of trading is, I think there was 2 hands. Let's do it again. How many of us want to sit in front of our computer screen all day long? Nobody now. Okay, so let me demonstrate it again. Here's the trading day. That's what we want, right? When you're looking at, as we go through Hercules, I'll be frank, we probably could have done this in 15 minutes. But I want to give you the background. Will you let me do that? Over the next few days, will you let me give you the background and some of the market actions that will help you be comfortable with doing that? Okay, good. Because part of what we're talking about here, and I've mentioned this in some of my videos, is this whole work money cycle. You know, that's how we were brought up. Man, I put in my 2 weeks. Where's my check? Well, the market doesn't always work like that. You know, I know one very successful day trader who didn't make money for 3 years. Fortunately for him, he made $20 million his first year. So he wasn't doing so bad, all right? Don't feel sorry for the guy. But can you imagine grinding away at something for 3 years and not making money? I mean, the looks I'm seeing out there, are you crazy? Why would you even ask me that question? So what we've got to do is get focused about, number one, what is the action of trading? And number two, what do we want? We want to make money. So as we go through this, and when Cecil comes up and he's talking about the actions to take, you've got to understand that it's not always going to result in money. So it's not always going to be work, make money. Sometimes it might be work, and there's nothing to do. Sometimes it might be work, and oh man, I lost money. But the times where you have work, and then you get paid, that's where our goal is to make those so big that the times we come in and say work, losing money, they just don't matter. That's the goal. Everybody okay with that? Yes. Okay. So let's take a look at page number 8. How the markets work. Fundamentals, baby. Well, when you buy, price goes up. When you sell, price goes down. Now, there are other types of fundamentals. I love Ed Sequoia's description of them. He calls them funnymentals. And I'm going to share with you some graphs to make that point. You've got to be careful when you start looking at fundamentals from a news perspective. When you're watching news announcements or you're watching economic data that's coming out, just be very careful. Because that's going to affect your thinking process, isn't it? What does that mean? There's a report coming out. Should I not trade? That's why in the kit I say, just don't trade. Because it's going to cause more confusion, really, than it's worth. I'll trade through news announcements. Depending on the broker I'm using, that's sometimes easier said than done, just because of the mechanics of the market. So we've got